look, we don't compete with Tesla directly. We are not making cars, etc. Right? We are building L4-5 autonomy. We're building a Waymo driver, which is general purpose and can be used in many settings. They're obviously working on making Tesla self-driving too. I've just assumed it's a de facto that Elon would succeed in whatever he does. So, like, that is not something I question. So, but I think we are so far from these spaces are such vast spaces. I feel like we are in the AJI phase where, like, dramatic progress, some things don't work well, but overall, you're seeing lots of progress.
I think we're running on the AI front. We are close to what you might call AGI. Or digital superintelligence. I think we are seeing an explosion in digital superintelligence here.
Google CEO Sundar Pichai just admitted that what Elon Musk is building with Tesla and AI could reshape the entire market around him.
We're the first autonomous vehicle company to receive FAA approval to be able to do that kind of pickup. And so we're deeply engaged with SFO officials so that we can do exactly that kind of pickup. The other thing that we're also deeply engaged in with our employees right now is fully autonomous rides on freeways.
Waymo, the company backed by Google, is already running fully driverless rides in major cities. And honestly, it looks like they might be pulling ahead of Tesla's full self-driving. We're going to break down what Waymo's been doing, the tech behind it, how far along they really are, and compare that to Tesla's promises, which, let's be real, have been delayed for years. Personally, I think this is a big deal. Waymo isn't talking about what's coming someday. They're doing it now. And if what we're seeing continues, this could be the moment they overtake Tesla in the race to build the future of driving. Let's take a look at the numbers, the strategies, and what this all means for the road ahead.
Since we began as part of Google nearly a decade ago, our goal has been to bring this technology to everyone, everywhere. Now with Waymo, our ultimate goal is to provide a self-driving vehicle tailored to every trip and to every purpose. And we can do this because we're building the driver. And this same driver can be adapted for all kinds of vehicles. Well, now, I'd like to introduce to you all the world's first premium electric fully self-driving car. This is the self-driving car that car lovers have been looking for. We're going to design and engineer a self-driving Jaguar I-Pace equipped with Waymo technology.
And with Waymo, the I-Pace will become the first fully electric self-driving luxury SUV in history.
Now with this partnership, we can add up to 20,000 I-Paces to Waymo's fleet in the first 2 years of production. Those 20,000 self-driving vehicles can serve about 1 million trips in a single day.
We have a clear vision of smart mobility, new levels of high quality, safe, enjoyable, entertaining and exciting journeys, giving our customers precious, valuable time back.
And as part of a shared self-driving service, we can make this premium experience accessible to everyone.
Okay, I'm just gonna say it. Waymo might actually beat Tesla at its own game. While we've been waiting on Elon to deliver on full self-driving for years, Google's Waymo is already out here putting real driverless cars on the road. Like, not test cars. They're launching 20,000 fully electric, fully autonomous Jaguar I-Paces, and they've already logged 22 million miles with no driver. That's insane. I mean, Tesla's system still needs someone behind the wheel. Waymo, you literally just get in and the car drives itself. No steering wheel, no pedals, just a smooth, quiet ride. And here's the part that really got me, the safety data. Fewer crashes, fewer injuries, fewer airbag deployments than human drivers. That's not marketing, that's hard numbers. Personally, I think this is a huge moment. It's not hype anymore. This is real, and it's working in cities like San Francisco and Phoenix. Honestly, it feels like we're watching the future actually arrive. If I were Tesla, I'd be nervous right now. Waymo's not talking about self-driving, they're doing it.
Driverless cars are here.
Definitely a magical experience.
It was just smooth, it just works.
This is crazy, like, I heard about this when I was a kid, but like, it's here now.
But the public is still divided.
I wouldn't trust it.
I just kind of believe that the car should be driven by a person.
I can't imagine a car driving off the bridge and then navigating around here with all the people walking. And
Waymo is in pole position, delivering 22 million driverless miles in Los Angeles, San Francisco, Phoenix, and Austin.
It's been kind of wild in the last couple of years to see the progression of the technology. All of the learning we had over the last 15 years has started to compound, and things are moving faster.
But less tested players, they're about to jump into the ring, including Tesla, whose track record of empty promises could cast more scrutiny on the movement, for better or for worse.
The expectation, we don't have a lot of things out there that I just hear people are so excited about other than this day.
I'm Deirdre Bosa, and this week in tech, cruising or crashing into our driverless future. San Francisco has become a city of driverless cars.
I don't want a human anymore. I want a Waymo.
Google-owned Waymo is leading the way. Paid rides doubled in just a couple of months, and rider-only miles, they tripled in less than a year.
10 years ago, you had demonstrators with people behind the wheel as so-called safety drivers. And today there's an empty car and you step in and you get driven by the car magically. I think for anybody not familiar with the technology, that this is something very close to magic.
Waymo says it understands the stakes.
Our mission is to build the world's most trusted driver, and the stakes of that are multiple.
What began as a moonshot 15 years ago under the Google umbrella, it has become mainstream in some of America's largest cities. Its high-end electric vehicles, they can be found all over the roads here in San Francisco. But what hinders its progress in the rest of America? Skepticism.
In the early days, people set very high expectations for how quickly this technology was going to be ready. And as an industry, we did not meet those timelines.
For many consumers, driverless cars still seem like something from a sci-fi movie. And the number one concern is safety.
If the people that are behind driverless cars wanted to increase confidence, it would be like, show me 10,000 practice runs that worked perfectly.
So Waymo's on a mission to do just that, using data to back up its case. A new public safety hub that compares driverless miles to human-driven miles and concludes that robotaxis are not just safe, but safer. Fewer airbag deployments, fewer crashes causing injury, and fewer police-reported crashes than human drivers. Riders who have taken a Waymo, they say they feel safe too.
I actually felt much safer getting in the Waymo than I do in just like most cars, especially the way some Ubers drive.
Oh, a bajillion %, because they have like so many sensors, and like that computer sees everything.
I definitely trust a computer more than a human, because a computer can't lose attention, right? It's always paying attention to 360 as opposed to human.
As a woman, I am concerned a lot of the time after going home after nights out about like who my driver is going to be, and I think that's the really nice part about it, and that's what's also helping me not be as concerned about safety, is because the actual biggest safety concern has been dealt with.
Now other competitors are ramping up their own efforts and looking to capitalize on the moment. There's Amazon with Zoox.
Amazon in this space rolling out its Zoox cars later this year or early next.
Okay, so Elon's back at it, says Tesla's launching robo-taxis in Austin by June. And in a few years, we'll see 10 million autonomous cars on the road. I mean, that's classic Elon, right? Big vision, wild numbers. And to be fair, the data is showing progress. Tesla's full self-driving has gotten way better. Apparently, about 80% of drives now finish without the system disengaging. That's legit impressive. But here's the thing. I'm still not convinced it's enough. Because while Elon's talking about the future, Waymo's already doing it. They're out here running 200,000 fully driverless rides per week. No driver, no fallback, you just get in and go. That's a huge gap. Elon says Waymo's too expensive and over-engineered, and that Tesla will win with scale and software. And yeah, that sounds great. But you can't software update your way around trust. Safety, regulation, public confidence, that stuff takes more than AI and hype. If Tesla pulls it off, awesome. But right now, Waymo's in the lead. And honestly, if I had to get in a driverless car today, I'd pick the one that's already proven it works.
I think what's running on the AI front, we are close to what you might call AGI, or digital superintelligence. I think we are seeing an explosion in digital superintelligence here. And then we've got at Tesla, we'll be launching unsupervised autonomy, basically self-driving cars with no one in them, in Austin next month. So it's a big year for sure. Many other things on in the works too.
Sundar Pichai had a lot to say when Lex Fridman brought up AGI, artificial general intelligence. And honestly, it was a thoughtful, realistic take. He acknowledged how far things have come, but also reminded us how far we still have to go. He even joked about AJI, artificial jagged intelligence, a funny but honest term to describe where we are today. Moments of brilliance from these AI models followed by really dumb mistakes, like failing to count letters in the word strawberry. It's true. We're in this weird phase where AI can write essays, solve math problems, and drive cars in downtown San Francisco, and yet sometimes it can't answer a basic question without tripping over itself. So when Sundar says we'll see mind-blowing progress by 2030, but that true AGI might come a little after that. I get it. It's a cautious optimism. He's been in this space long enough to know it's not just about raw capability, it's also about alignment, safety, hardware, ethics, and scale. He's talking about society needing tools to handle fake AI-generated videos. He's thinking long-term, big picture, responsible deployment. But then, we hear from Elon Musk, and he's on the other side of that optimism scale. To him, we're basically already there. At the Qatar Economic Forum, Elon flat out said we're close to AGI, or as he calls it, digital superintelligence. That's not just hype. It's his belief that the explosion in AI we're seeing right now is the real deal. He's got multiple projects pushing the boundaries all at once. Neuralink implants helping people control computers with their thoughts, a SpaceX Starship that might soon become the first fully reusable orbital rocket, and Tesla's unsupervised robo-taxi fleet about to hit the streets of Austin. From his point of view, this is the year everything changes. Not 2030, not 5 years from now. Now. That's the Elon difference. He's always working in fast forward. Whether or not he's right is still up for debate, but what's clear is he's pushing the envelope on every front. And this is where the contrast gets fascinating. Sundar is saying, we're close, but we still have time to prepare and shape this. Elon is saying, it's already here, buckle up. If Elon is even halfway right, he's about to leapfrog everyone. And I mean everyone, because AGI isn't just a fancy AI milestone. It's the gateway to everything: self-driving cars, humanoid robots, real-time language processing, robotics, diagnostics, autonomous factories, you name it. If Tesla's cars go fully autonomous without supervision, and if they beat Waymo, which has spent billions just to get to 4 cities, then Tesla becomes more than a car company. It becomes the infrastructure of transportation. Every car turns into a software platform. And if those cars are powered by an AGI that learns, adapts, and improves across millions of miles, Elon will own the market. Not just EVs, not just robotaxis, the whole damn transportation economy. Meanwhile, Sundar's Alphabet, for all its brilliance, is still explaining AI's limits and building slowly. You can respect that. In fact, we need companies like Google to take a responsible, measured approach. But in the real world, whoever delivers first usually wins. And Elon is betting everything that he's first. So here's where I land. Sundar Pichai is wise to be careful. But if Elon's right and AGI gets locked into Tesla's ecosystem before anyone else figures it out, then we're not just talking about one company taking over a market. We're talking about a full-on shift in power across tech, transportation, labor, energy, even healthcare. Because AGI isn't going to be limited to answering your questions in a chatbot. It's going to run vehicles, manage factories, control satellites, diagnose patients, and do it all without ever needing a break. That's why this moment matters. If Elon's version of AGI hits first and scales faster, then yeah, he won't just own the market, he'll own the future. What do you think? Is Elon really about to take over the market with AGI and robotaxis? Or is Sundar right that we're still a few steps away? I'd love to hear your take in the comments. If you got value from this video, hit that like button. It helps a ton. And if you want more breakdowns like this, don't forget to subscribe. We've got a lot more coming.
Well, I like to win, if that's okay. I would tell people I was doing semiconductors, and they would say, what? Like, what's that? Like, you build chips? Like, what does that mean? Like, now, everybody knows. Like, everybody talks about chips. Then was our clean sheet design to, really design the next generation architectures for the next decade.
For years, the AI world has been ruled by one company. NVIDIA wasn't just ahead. They were untouchable. Tech giants, researchers, and startups all flocked to Jensen Huang, while AMD and Lisa Su were treated like a footnote. AMD made GPUs, yes, but in AI, they were never considered a real competitor. That was the reality, until now. Because something just happened, something nobody saw coming. OpenAI, the biggest name in artificial intelligence, just signed a massive deal. Not with NVIDIA, but with AMD. And that single move may have just flipped the AI war on its head. But to understand how shocking this is, we have to understand why AMD was so far behind. Both AMD and NVIDIA made GPUs, so why did the entire AI industry crown NVIDIA the king while leaving AMD behind? In Q2 of 2025, NVIDIA's market share hit an unbelievable 94%. AMD sat at just 6%. Even worse, NVIDIA's share was increasing. AMD's was dropping. The gap wasn't closing, it was expanding. The reason for this domination can be summed up in one word: CUDA. CUDA, NVIDIA's programming architecture, became the foundation of modern AI. While AMD had good hardware, they didn't have anything like CUDA. NVIDIA launched CUDA back in 2007. And because they launched it early, supported it consistently, and integrated it deeply in research, it became the default. Engineers learned CUDA. Universities taught CUDA. Companies built their systems around CUDA. NVIDIA didn't just build hardware. They built an entire ecosystem. And that turned into an unbreakable moat. Meanwhile, AMD was fighting a completely different battle. While NVIDIA was looking far into the future and investing in AI long before anyone else saw what was coming, AMD was focused on competing with Intel and dominating console graphics. NVIDIA's vision wasn't about gaming or consumer GPUs anymore. They were preparing for the AI revolution years before ChatGPT or any large language models even existed. Back in 2016, NVIDIA publicly declared that deep learning breakthroughs would reshape the entire tech industry. And they started building hardware specifically for AI workloads, long before anyone else took it seriously. So when the AI boom hit, researchers didn't just need GPUs, they needed NVIDIA GPUs. And even though AMD saw its own revenues rise from $9.7 billion in 2020 to $23 billion in 2022, it couldn't sustain it. Profits collapsed from $3.7 billion down to $1.2 billion, then further down to just $600 million. Researchers realized AMD wasn't the answer. NVIDIA was just too far ahead, in hardware and in software. AMD wasn't even in the race anymore. Desperate to catch up, AMD made a massive move in 2022, the $49 billion acquisition of Xilinx. It was the biggest chip deal in history, but because it was paid through stock, AMD shareholders felt the hit immediately. Confidence dropped. The stock tumbled from $143 to $84. And AMD wasn't done spending. They later acquired Nod.ai, an AI optimization company trying to expand their software ecosystem. They were pouring billions into AI, but they still couldn't catch NVIDIA. Investors didn't believe in them. Analysts doubted them. And by early 2025, it looked like AMD was losing even more ground.
An analyst day yesterday. It's the first time in 3 years. The chipmaker says that revenue growth will expand 35% a year over the next 3 to 5 years. The company's AI data center is expected to grow at 80% a year and potentially hit tens of billions of dollars in sales by 2027. AMD's stock up phenomenally. You can see since she took over, 589%. It's always nice to sometimes take a step back from just, what's happening on a quarterly basis to really talk about long-term strategy. It's been, as you said, it's been 3 years since we've hosted an analyst day. But what we thought is, there's been so much that's changed in the market just over the last 12, 18, 24 months. So just take a step back and talk about the company as a whole. And frankly, we're in just an amazing cycle for, technology around AI. So, back to, the major points, the market is accelerating at a pace that we, just did not understand. We started a couple of years ago, we thought the AI accelerator TAM might be $300 billion, and that sounded like a really big number. Here we took it up, and now when we take a step back, we see this massive opportunity, really over $1 trillion overall market as we get through 2030. Everybody needs technology. Think about it as computing as equating to intelligence, and if you can get more intelligence, why wouldn't you want more computing? From that standpoint, we're really excited about what we have. It's a product portfolio, it's a set of partnerships, but it's also a vision for where computing is going in the future. We spend a lot of time in the ecosystem, and being in this industry for as long as I've been in this industry, over 30 years, I think you see a lot of cycles, a lot of technologies take off. The key is what people are saying as they're actually utilizing the technologies. We work with all of the largest hyperscalers in the world, all of the largest enterprises. And if you looked at sort of the AI trajectory over the last couple of years, tremendous excitement, ChatGPT came on board. Everyone was like, wow, this is pretty good. And then enterprises started using it. And early enterprise usage was a little bit slow. People were kind of just trying to figure out what to do. But if I tell you what we've seen in the last 12 months, one of our largest customers say, we can see the inflection point now, Lisa. We can see demand is accelerating. We're now starting to get real productivity out of the AI use cases. And we have all of the largest hyperscalers in the world. So it is something that we always are looking for the signals in the market, but the signals in the market right now say that we're still at the very beginning of the technology. I think it's the right gamble, and the way I would say it, Aaron, is we can also definitely see that more computing, the pointers to more productivity and more capability. Now, exactly timing of ROI, right. If you're talking about, is it, and so I think that's where it becomes a little fuzzier. But I would say that, look, our largest customers are extremely disciplined companies, balance sheets to invest, and this idea...
I'll give you an example. The one that everybody talks about is OpenAI.
Yeah.
So OpenAI in 2028 is expecting to lose...
Again, Aaron, I would take a step back and say, when you look at the entirety of what the AI, sort of technology, the largest hyperscalers, you have, I call it the AI native leaders like OpenAI, Anthropic, others. And what the underlying foundation is the same. Relative to your comment about OpenAI, I think OpenAI is a phenomenal company.
I love the business. I love what they're trying to do. I'm trying to understand the math.
Let's start with the vision. And look at the math. The vision will say you need more computing. That today, computing is a limiting factor in how much people can adopt that in a number of different places. And so, yes, you have to invest ahead of the curve so that you can get the entire user base on there. Take a look at the growth in users, and not just at OpenAI, but across the entire AI ecosystem. We're seeing that growth because there is true productivity coming at the other end of it. And from that standpoint, I think we are all, like I said, we're disciplined business people, an incredible opportunity in front of us. And absolutely, if one has the capability to address that with a fantastic balance sheet, you would absolutely do that. For AI data centers, you are scaling pretty rapidly. You see the growth there in terms of revenue being greater than 80% and potentially getting to have more than a 10% market share in that business over the next few years through NVIDIA, because by some estimates, they have more than 90% of the market share right now. What's your plan for doing that? This is an amazing market with tremendous growth. And whenever you have a market that is, let's call it early in the cycle and also on a steep growth curve, and it favors partnership. From our standpoint, technology roadmap, we're super excited about the new products that we're bringing out. Our MI350 series currently in production. We have a big step up with new rack scale architectures coming next year. Is a really strong set of partnerships. Aaron mentioned OpenAI. We have partnerships with Oracle, Meta, all of the large hyperscalers. And Becky, is that everybody wants to have sort of multiple solutions, and frankly, there's no one solution that fits all. Workloads, you're going to want to have the best technology for each one, and we do believe we will have a significant piece of this market between large hyperscalers, enterprises, as well as sovereign nation states that are out there building large data center. They are an excellent option, and we've talked about some of the key partnerships to do that.
But then came AMD's first real swing, the Instinct MI300 series. GPUs built specifically for AI, and surprisingly, AMD hit hard. The MI300X had memory bandwidth of 5.3 terabytes per second. That's 60% more than NVIDIA's H100. It even had 40% lower latency in LLM workloads. And at large batch sizes, the scale companies like OpenAI need, AMD's cost per token was lower. For the first time in years, AMD didn't just catch up. They were beating NVIDIA in some key areas. Companies like Microsoft, Dell, and Meta signed on to use the MI300 series. Expectations skyrocketed, but the excitement didn't last. Analysts predicted $8 billion in MI300 revenue. Then it dropped to $5 billion. And the final number for all Instinct revenue in 2024? Just $5 billion. Not even close to what the industry hoped for. Analysts began saying AMD's roadmap wasn't competitive enough. ROCm, AMD's software platform, was powerful and flexible, but nowhere near as polished or easy as CUDA. Developers hesitated, companies hesitated, and once again, AMD fell behind. But here's where everything changes. Because while everyone focused on benchmarks, performance charts, and revenue projections, they missed the biggest factor in the entire AI hardware war: supply. NVIDIA owned 94% of the market. That meant shortages, long wait times, and customers who were completely dependent on one company. Even Jensen Huang indirectly hinted at these issues. The entire AI world was built on NVIDIA, and that level of dependency brought serious risk. In late 2024, Vultr became one of the first major cloud platforms to offer AMD's MI300X to the public. Suddenly, developers could actually test AMD hardware, something they never had easy access to before. And this was just the beginning. Because on June 12, 2025, at AMD's Advancing AI event, AMD announced something huge: the MI350 series and early details about the MI400 and MI450 generation. But here's the shocker: they weren't designing it alone. OpenAI was helping them build it. The world's most influential AI company was directly helping shape AMD's next generation of GPUs. And then, just months later, came the announcement that flipped the AI war. OpenAI's next-generation infrastructure, the backbone of their future models, would run on AMD Instinct GPUs, starting with the MI450 series in 2026 and expanding far beyond that. And then the real bombshell: this deal could reach as high as $100 billion. $100 billion. Investors were stunned. The industry was stunned. Even NVIDIA's CEO Jensen Huang commented on the deal, saying he was surprised AMD would give away 10% of the company before they even built the product. Because part of the deal includes AMD giving OpenAI warrants for up to 160 million shares, nearly 10% of the company, if certain deployment milestones are met.
At AMD's Advancing AI event in San Jose, California, where AMD just unveiled a slate of new AI hardware, software, and systems designed to compete with NVIDIA.
First of all, it's been a big day for AMD, really exciting. I love talking about our new products, you know that. So we just recently announced this is our newest AI chip, and it is fantastic. It's the best inference accelerator out there in the market in AI today. We're just seeing so many more use cases, John. Like, people are using AI everywhere, and so one of the most important things for our customers is from their chips. So when you think about tokens per dollar, that's kind of the metric that is used. And this chip will give you 40% more tokens to offer AI at a much more affordable price across the world. So yes, very exciting. We also previewed our 2026 lineup of new accelerators, and we're not just doing chips, but we're doing big rack scale systems. And so all of that was part of our announcements today.
How the innovations will translate into share gains versus the likes of NVIDIA. So why is it beyond chips now? And why is it about racks? That was a big part of the ZT system.
Really excited about the momentum that we're seeing in the AI market these days. If you look today, 7 out of the top 10 model builders and AI company AMD products. That includes Meta, Oracle, OpenAI. Sam Altman was here with us today. Meta and Oracle were here. XAI. When you think about what they need, what they really want is the latest generation hardware that gets into the data center and then gets into serving production workloads, putting a significant amount of investment into the software layer to make it just super easy to use. And we're also building rack scale solutions. The acquisition, we've added 1,000 design engineers, and the whole purpose is so that we can help our customers get to the market with our AI solutions as fast as physically possible.
Big cloud providers who are also now big AI providers, AWS, Azure, Google, they've got their homegrown AI chips that they're trying to use, keep their costs lower, their margins higher. How do you play to both ends of that and win?
Think about it. I view we're still in the very early innings of AI. And frankly, as much as we've seen a ramp up in AI, sort of said that the market is going to grow over 60% annually for the next number of years to over $500 billion in 2028. In that market, what people want is the most flexible and the most programmable architectures out there, and that's really what we're building. And the key point, even deep co-development with our partners. So hardware, software, systems coming together, making sure that we have the right compute for the right application. If you look at just how much improvement, I can just give you some stats, right? If you look at the solution that we're just talking about, the MI355, hold it up high, yes. I want to make sure everyone gets to see my new baby here. We're very happy that it is now out in production. This is like 3 times the performance of just what you saw last year. So that's just how much value you're getting. And we previewed a 400 series, and there we're going to see like 10x types of improvements. So that's how much we can get from the hardware and working closely with our partner. Open is the foundation of what we do at AMD. I'm a real believer in the fact that an open ecosystem, thousands of developers here today, they're playing with our hardware, they're learning our software, and we want all of them, our stuff, so that we get the benefit of all of that innovation, and they get the benefit of bringing their best ideas in.
It's bold, it's risky, and it shocked the entire industry. AMD's stock soared over 70% in days. This wasn't just a partnership, it was a statement. OpenAI was signaling to the entire world that AMD wasn't just catching up, they were becoming a real competitor. They saw AMD's potential, they saw the improvements, they saw the roadmap, and they believed in the silicon they were helping design. But the war isn't over. Because while AMD's hardware is finally competitive, software remains their Achilles heel. ROCm must evolve. It must scale. It must be reliable enough to support an entire generation of AI models. And it must do it before this massive OpenAI deal begins rolling out. If they can close the software gap, AMD might actually challenge NVIDIA's dominance. If they fail, the consequences could be brutal. The AI war has officially flipped. NVIDIA's monopoly is no longer guaranteed. AMD isn't just in the race. They're taking swings big enough to shake the entire industry. And with OpenAI backing them, the world is watching. Only time will tell if AMD's bet pays off. But one thing is certain. NVIDIA has never faced a threat this big.
It's a phone call you get from your chairman of the board, and he said, "Lisa, can you talk?" I'm like, "Sure." And he goes, it's time. He said, the board has made a decision and they would like you to be the next CEO. The opportunity to be CEO of AMD was truly like a dream come true. It's like, wow, okay. And here you're going to have the opportunity to lead a major semiconductor company on, yes, you're right, it wasn't the best time. I was pretty confident that we had the right pieces. They just needed to be put together in the right way. To really design the next generation architecture in CPUs for the next decade. And then we went through a period of just tremendous growth.
A lot of the things you said have all happened, and it's because you've been a believer in Elon Musk.
He believes that digitization and autonomy is going to be driving the future, and he thinks we're on the verge of having an era of incredible abundance. So he's setting it up for that. And then in addition to that, what he believes is that in order for the planet Earth to survive, that America has to be militarily strong. And the only way you can be militarily strong is you can't be financially weak. So what he's trying to do is set it up so that you'll be financially strong, and then you can be militarily strong, and that's going to protect the planet, he believes. And I agree with that.
Tesla just dropped 15% in a single day. That kind of move rattles investors, especially when the stock is already down more than 50% from its peak. On the surface, it looks like trouble. But Ron Barron doesn't see trouble. He sees timing. He's been one of Tesla's earliest and biggest supporters. He's made billions from those decisions. And even now, after all that growth, he believes Tesla has barely scratched the surface. While most people are watching price charts, he's watching what the company is building. This goes way beyond electric vehicles. Barron sees Tesla shifting towards something much larger, a transportation platform built on full autonomy. He's talking about a future where Tesla keeps the cars instead of selling them. A fleet of self-driving vehicles owned by the company, generating income every day, year-round. He breaks it down simply. Each car could bring in $30,000 to $50,000 a year in revenue. 1 million cars doing that creates $30 to $50 billion in annual profit. Not potential, profit. That completely changes how Tesla's value should be calculated. And this isn't speculation. Tesla already has the software in place. The factories are running. The tech is improving. The gap between Tesla and everyone else in terms of scale and efficiency keeps getting wider. Barron believes the company is entering a new phase, where traditional metrics don't capture what's really happening. He also makes a point that most analysts ignore. He sees current market volatility as part of a broader reset. Government policies, inflation control, election cycles, they're all affecting sentiment. But they don't change Tesla's ability to execute. They don't slow down the roadmap. They don't erase the billions Tesla could make from energy, AI, or mobility. For Ron Barron, the path forward is clear. Tesla isn't reacting to the market. It's building the next version of it. A version where vehicles don't just move people. They power an entirely new stream of income. And in his view, that shift has already started. Let's break down why this matters, and why Barron thinks now is the time to pay attention.
These two investments represent about 15% of our assets, about 10% for Tesla, 5% for SpaceX. I watched this with puzzlement, everything that's happening, but I think that one element that is going to be important for Elon is that he will be able to, he understands where there's unusual spending that's much greater than it should be, and how that can be corrected. Pretty easy, actually. You have a lot of cost-plus contracts, so that can be changed to the way contracts work for SpaceX, where they take the risk instead of the government. So cost-plus contracts are anathema to operating.
I'm sorry, what was that?
What's the word? They're a bad thing. Cost-plus contracts don't work very well for the person who's contracting. Is that you agree to do services prizes for the government. They give you a price, and then you go out there and find a lot of subcontractors to do this work for you. The subcontractors, the longer they take and the more they cost, the better it is for you, because you're getting 12% off the top as pure profit. Just as a prime contractor, you want things to cost more. So, for example, the government was sending a program. They want to send people back and forth to the ISS, International Space Station. So they give 2 contracts, I guess about 10 years ago. One to Boeing for $4.3 billion. A year later to SpaceX for $2.1 billion. And SpaceX has since been back and forth 40 times. Boeing got there once and they couldn't get their guys back.
Right.
So we had to go rescue them. And that contract now has cost $18 billion. It's going to cost $98 billion or $88 billion. It's supposed to cost 11. And therefore, they benefit by something taking longer and costing more. SpaceX, if something goes wrong on a Friday afternoon, at 4:30, people don't go home until it's fixed. The other places, 4:30, let's get out of here, and they don't care because it's the government's money, not theirs. You got to launch regularly in your sites regularly, like a lot of times every day. And if you have to go get permits every time you launch, airplanes don't have to get permits every time they launch, every time they take off. If you have to do that, that really slows you down. You can't do it. So basically, there has to be a change in regulations also. So there have to be more reasonable regulations than are in place right now, and you have to have different, this cost plus contract stuff has to go. I think that he had similar views to mine. I don't feel like I'm a Democrat anymore, but he had similar views to mine, and for a long time. But I think that the Democratic Party has been taken over by unions, teachers unions, UAW. I mean, one of the things that was really interesting is that they had an EV summit at the White House. Everyone's been talking about this a year or two ago, and in that period, they had the leading people for electric cars were invited to the White House to meet with President Biden. And Musk was invited initially and then disinvited. And the person who was praised for leading the way and in the conversion was Mary Barra. I love Mary Barra, but Mary Barra in that quarter did 29 cars, 29 electric cars. We did 300,000. And she was the one who was invited, and she was the one who was praised as the leader in this conversion from gasoline cars to electric cars. So that's because the UAW said, I don't want Elon Musk in the White House. And so it's a lot of these interested parties that say that, no, it doesn't work for me to have someone who's not union. The reason UAW has been unsuccessful unionizing Tesla's plants is because the people in Tesla's plants are becoming wealthy because they're shareholders in Tesla stock. Same thing for SpaceX. So you can't unionize people if they're doing great where they are. Last year there were 5.8 million people. 5.8 million people applied for jobs at Tesla and SpaceX for 30,000 jobs. 5.8 million people for 30,000 jobs. Tesla might have 150,000 people and SpaceX probably 15,000, but they had 5.8 million. They get the best people. To get the best people who do the best, and how do you take people like that and make them into a union where they're just taking something off the top and it's a job that's not that interesting? A lot of policies that they have I don't agree with. The inclusion policies. I think that if someone is really talented and work really hard, they should get the benefit from that. And the policies of Democrats, if someone's not doing well, they want to say, okay, we'll lift you up. I'm fine about giving people opportunity. I'm not fine about taking something from someone who's worked really hard to achieve what they have and taking it from them and giving it to someone else. This is an advisory role, so I don't think, right now he's doing a lot of advising. I don't know how active he is in choosing the people who are being placed in these roles, but he was supposed to come. We had a funny bit planned. I was telling you about this before. We were initially going to do a Saturday Night Live Open.
Here at the Barron Investment Conference today.
Yeah. And then I told him about this. He said, well, why don't we do 30 minutes about talking about the future instead? I said, okay, great. And then they called yesterday and said he can't do it. He's in Mar-a-Lago, can't arrange it, can't leave, can't come in, can't get people in SpaceX told me that he doesn't miss any meetings, so he comes to these meetings. Same thing with Tesla. I don't understand how he's able to do all this.
Yeah, there doesn't seem like there's enough hours in the day.
No, it's amazing what he does. And he lives on airplanes and flies around all over. I don't see how anyone can compete with him the way he works. But I think that, so he says, well, I'm not a spring chicken anymore. He's 53, I guess.
I'm sorry, he says what?
He says, I'm not a spring chicken anymore. He's 53. I'm 81. So he's 53 and he flies all over. And so he, it takes a toll on his body. But boy, he is sharp. He can talk about everything, anything, like William the Great, the Conqueror, just everything. He's so well read. And I guess he must have a photographic memory. He remembers everything. Stock price is the same as it was 3 years ago. So it was higher 3 years ago than it is today, actually. And the way I think about Tesla is I think that so our cost, I met him in 2010. It took 4 years before I became convinced to invest in him. He said, what took you so long? And we invested $400 million between 2014 and 2016.
Just in Tesla, or is that everything?
Just in Tesla.
Just in Tesla.
$400 million in Tesla, 14 to 16, and we made about $6 billion in profit so far. And we sold a quarter of our stock in 2020. Yeah. 3 years ago, 2021, after it had gone up 20 times. And
there were people who questioned you at the time why you were selling 25%. I think you told us that it was because it had gotten to be such a big part of the portfolio.
Yeah, it was too big. It was 20 and up 20 times. And the idea that I wanted to have is I didn't want people to think that I had died, and that's why they still own the stock. So I wanted to make, and by the way, 2014 to 2016, when we invested that $400 million, the stock was acting like a yo-yo. Yeah. And for the past 3 years, the stock has also been a yo-yo performing stock because what they're doing is that they're reinvesting in their business. They're penalizing current profitability to become a much bigger business in the future. And whenever that happens, so the reason we've outperformed, so I was telling you before, 97% of our assets do better than the indexes, 95%, top 20%. We had $100 million in under management in 1992, $10 million in 1982. Now it's $45 billion, but we've made $49 billion in profits. So we paid people over the past 30 years $4 billion more than we made them, more than they've given us. But we now have $45 billion. I'm hoping that in the next 10 years we can quadruple our assets. So I think that it's right now worth $1 trillion. And what's Bitcoin? $1.7 trillion? So would I rather have 2 Teslas or 1 Bitcoin? So basically, the way I think about it is that Tesla, I think, is going to be worth $3 or $4 trillion, $5 trillion in 10 years, based upon the business plan that I'm aware of. And then Elon believes that longer term, it's going to be worth $30 trillion. It's now being worth $1 trillion.
Do you believe that?
Well, the people from Goldman Sachs were doing something for me. One of the executives in California who's being groomed, I think, to be the next CEO of Goldman Sachs, he and 3 other people from Goldman came to visit me this past summer at my house in East Hampton. And they were telling me, his name is Dan Dees, they were telling me that Elon, Goldman then was struggling to get their business value from $150 billion in the market to $180 billion. So Elon said, why don't you come to my plant in Palo Alto where I have Optimus robots? I want you to see what that is. So he says, so we go there, I take the board and we go out he says, Ron, it's dystopian, it's amazing, you got to go see this. So I went to see it. And there's robots walking all over. And the idea that he has is that, so here we have, there wouldn't be any EVs without him, there wouldn't be any autonomous driving without him, there wouldn't be any rockets you use over and over without him, you wouldn't have any Starlink without him. So the idea is that this Optimus robots, he thinks is going to be his biggest business ever. And he says everyone's going to have robots. And my big question was when I was watching these things walking around and how intelligent they're becoming, super intelligent, I said, well, can they procreate? That's the question I have. And how is that going to happen? So I met him in 2010. And it took me 4 years before we began to invest. In 2014 and 2016 is when we bought the stock. We made about 20 times on our investment there. And then in SpaceX, we've been investing in that since 2017. And we're one of the largest investors in SpaceX.
It's not a publicly traded company, but what about your valuation?
We have about $1.7 billion invested right now. It cost us $700 million. $400 million of that is me. On Tesla, we have 17.5 million shares. 4.5 million shares is me. So we've been an investor for a long time, so I obviously believe. Mm-hmm. And initially when we invested, it was making me crazy when I was seeing some of the things that he was doing, as much as I admired him. But I do think that, and I calmed myself down, and I said, I really deserve to make a lot of money by investing in this and by staying with it. And we deserve. And what I thought was that, what the point that Walter made yesterday was that untethered, these things can happen, and if he was conventional, it would have never happened. So he's the guy who got us electric cars, he's the guy who got us to space. If he was a conventional person, he was on Saturday Night Live, and he said, hey dude, do you think I'm a normal person? I got you electric cars, and I'm going to take you to Mars. Seriously, am I going to be normal? And he's a very funny, engaging, smart, incredibly hardworking person. And I don't remember. So one story. When I went to a dinner in East Hampton about 2-3 weeks ago, when David Rubenstein was interviewing Walter, and they sat me at the table with Walter right next to the stage, and then David interviewed him, and then they mentioned me 3 or 4 times in that, and then afterwards he said, Ron, the guy knows more than anyone else here about him. Why don't you say something? And I said, I can't say something. This is your show, and I'm not part of that. And
but you're here now, so what would you say?
Well, one fast story is I agree with Walter. He has to be, untethered. And then in addition to that, when he was a child, he talked about all the problems he had with his dad. And he escaped from those. He would go home and he would read the encyclopedia. That was his nickname from his mom, Encyclopedia. And if any question he knew it. So he had a photographic memory. And what amazes me about him now is every time you ask him, how do you do that? How do you know that? How do you know what these things cost? He knows everything. It's a photographic memory. He remembers stuff. And so he's focused on costs, trying to drive costs out of everything. Everyone else tries to make as much money as they can. He's focused on his mission, long term, which is to make planet habitable, and then also to something bad happens to be able to keep humanity alive. To touch Tesla for a second, we're an investor in SpaceX also. And they just sent a Tesla car around the sun, just past the sun. I was reading the paper the other day. Just went around the sun. That's pretty cool. So there's all these things that are happening in the world that are, that are providing growth. I mean, Elon Musk was talking about how they want to set off nuclear weapons and nuclear bombs in Mars to create an atmosphere. So, with Tesla, there are many investments that we've made where it's been a very long incubation period that we have made, which is taken for the investment to prove out. When we invested in Vail between 1996 and 2006, we made a very modest return, 50, 60, 70% over 10 years, and then we made 7 or 8 times our money. When we invested in Wynn Resorts for 2001, we were one of the founding investors. And Steve Wynn invested $250 million, and a Japanese investor invested $250. And he told me that there will never be another investor in our company except for you, if you want to invest. And I'd like to have you as an investor. And so we invested after we studied the land that he owned and what he was planning to do. We invested $25 million. That was at $20 a share. And then when he ultimately went public, he couldn't get 12 people to sit in a room with him. And he went public at $15 or $16 a share or $13 a share. And we invested another $25 million. No, maybe we invested $50 million at 20. And then when it came public at 13, invested $7 or $8 million shares. And ultimately, the stock went to 150. And so it was down. After we invested, it was down 2 or 3 years later. And then people would say, I don't want to invest because it's not going to be a casino for 5 or 6 or 7 years. We invested during that period. We invest all the time when businesses are growing. When Tesla's case, when we invested in 2014, the revenues were less than $3 billion a year, $2.7 billion. This year, the revenues are going to be about $27 billion. So the company has grown 10 times in revenues since the beginning. Then they were sort of struggling and producing cars. And next year, I think they're going to do $35 or $40 billion in revenues. And I think in 2 more years, they're going to do $100 billion. That's because we haven't sold any stock, that's because the shares in Tesla got us. So we talked about investing at $220 or $218. It went up to $380, and now it's back to $220, $225 with some self-inflicted wounds. Elon thinks we're going to make 30 times in Tesla. I think we're going to make, from where it was $1.1 trillion, I was thinking we would make 4 times over the next 10 years. I think we're going to make more than that now from these prices.
Tesla's stock has been tumbling, but that's not the full story. While everyone focuses on the short-term volatility, Ron Barron sees a golden opportunity that others are missing. Tesla is building an empire on the future of autonomous driving, and this is a game changer. With robo-taxis on the horizon and a business model set to revolutionize transportation, Tesla's plan is about to redefine the market. So what's really happening behind the scenes? And why is this move set to crush the competition and transform the industry forever?
Tesla is coming off its worst trading day since 2020, falling 15% in yesterday's session. That stock is down now more than 50% from its all-time high that was reached in December. Still, if you're looking for the last year, it's up 25%, so it has been a pretty volatile stock. Joining us right now is longtime Tesla bull Ron Barron. He is Barron Capital's chairman and CEO. He's been, again, a longtime investor, not just in Tesla, but in many other Elon Musk companies. And Ron, thanks for coming in today.
Thanks for inviting me.
Let me ask you very quickly right now how you're feeling about the overall markets. You're a value investor. When stocks prices come down, sometimes value investors get pretty excited. How do you feel about things?
Well, it makes people very unsettled right now, all the things that are happening so quickly. I think they're intentional. I think that the government, you got Musk, incredibly consequential person, advising the president. And I think that all the things they say that make the market go up or down, you shouldn't think that those are by miscommunication or error. They're all intentional.
Not intentional to drive the stock market down, to get to a different place for the economy.
Well, everything. Yeah. I think they might even be intentional to try to slow down the economy, get rid of inflation. First-term president, the first thing you do is try to do things that are going to be unattractive to your constituents, if you're running for election. But you do it now, get it out of the way, and then a year and a half from now, then things will look better. A year from now, things will look better. But stock prices, I've been saying for a little while now, I can't believe how cheap they are. Those are the things that we look at.
So you're on a buying spree right now?
I didn't say I was in a buying spree. I just said I can't believe how cheap things. I own a lot of things. I'm a long-term investor. It's interesting. I listened to your analyst this morning on television, and you were talking to him about Tesla.
Gene Munster.
Gene Munster. Mm-hmm. And you were asking him, great shirts he has all the time, I guess. But you were asking him about, what he thought about Tesla. And I said, well, for a 4-week horizon?
Yeah.
A 4-week horizon. So that was his mindset, a 4-week horizon. And then,
I think he did say for a 4-week you could see some volatility, but longer term he was a fan.
Tesla is undeniably in a volatile spot in the stock market. A 15% drop in just a single day would make any investor nervous. And with the stock now over 50% off its all-time high, many are questioning the future of the company. But for Ron Barron, a longtime investor and staunch Tesla supporter, these price swings aren't an indication of underlying failure. Instead, they represent an opportunity. Barron's perspective on Tesla is built on a long-term vision, one where temporary fluctuations are just noise in the broader picture. Tesla's market value, in his eyes, doesn't fully reflect the potential locked within the company. While others might see risk in the market's reaction to current events, Barron sees opportunity in Tesla's ability to continue shaping multiple industries. From electric vehicles to energy, and even AI-driven innovations, Tesla is defining them. For investors like Barron, the company's future is clear. As technology advances, so too will Tesla's role as a key player in reshaping the future of mobility, sustainability, and artificial intelligence. This stock price drop is nothing more than a reflection of external forces rather than a fundamental issue within Tesla itself. Barron firmly believes that once the dust settles on current market volatility, the real value of Tesla will shine through. The company has too much going for it in terms of innovation and market positioning to be sidelined by short-term market turbulence.
If you're following Elon's moves and how government policies impact the markets, you need Seeking Alpha. It's my go-to for expert stock analysis to help you stay ahead. Check the link in the description for a special offer. Our channel may earn a commission.
Yeah, but I mean, it was focusing on 4 weeks.
Right.
And basically, I met Elon in 2010, and it took me 4 years before I invested anything. And between 2014 and 16, invested $400 million, and we made $6-7 billion on that. And then we invested in SpaceX in 2017 on, about $1.1 billion. That's now worth about $4.5 billion. I think that over the next 10 years in SpaceX, we can make 10 times. Elon thinks we're going to make 30 times. In Tesla, I think we're going to make, from where it was $1.1 trillion, I was thinking we would make 4 times over the next 10 years. I think we're going to make more than that now from these prices.
Ron, so there's 2 issues, I think, going on with Tesla right now. I'm curious where you land. There's the fundamental issue, which is just what's happening in the economy, how many people are going to buy cars, at least the products that we know about today, right? When you think robo-taxis develop, when you think new cars come out, all of that kind of stuff. That's the actual fundamentals of the business. And then there's the multiple question, which is really a market psychology question to some degree. I mean, they're related, hopefully, but there's sort of, as I look at it, sort of 2 issues. There's multiples are coming down in everything, but then there's the actual fundamentals of the business. So you're thinking a year out, it's a lot better. And my question to you is, what happens in a year from now to the fundamentals of the business? Meaning, are they selling more cars? Do you think that they're going to launch new models that we're going to see? Do you think the robotaxi product actually does launch and it's material to the business during that period? What's the sort of catalyst?
So fundamentals. So I want to get one thing straight, though. First of all, that we're investors in people. For the long term, question everything, don't take anything for granted. Investing for the long term, exceptional, takes time. We look out years, own it. We own things. We don't buy and sell things. As far as the fundamentals go, so I want to make sure we talk about other people too, other than Elon.
I'm not talking about Elon. I'm just talking about the business.
The major guy. So his business. I mean, you wouldn't have a business without him. You wouldn't have EVs without him. You wouldn't have autonomous driving without him. You wouldn't have the internet for every inch of the planet without him. You wouldn't have rockets that you can use over without him. I'm an unbelievable engineer. And the fundamentals of the business, this is an inflection point right now. The last time I was on, the stock price was 160. And I was telling you that I thought that, this was a really interesting time to buy because the the software was working. Waymo, when they have cars, you have to have $150,000, $200,000 car. Our car is, $35,000 car. And it's software. It's software and cameras. And so it's going to drive just like a person and probably better, way better than a person. Each new series of introductions is dramatically better than the last one. So fundamentals, the changes, is that, so historically what we did is, what Tesla did is they built a facility in China. They bought this junky place that was bankrupted by Toyota and General Motors in California, and all the union workers were fired. Hear that, Joe Biden? All the union workers were fired. And then every single one lost their jobs. And then we take over this plant, and they go look at it for the first time after he buys this thing for distressed price. They spent $1 billion on it. It cost us $20 or $30 million to buy it. And then they go to see it, and Elon says, yeah, let's go look at this place we bought. And it's a huge facility, 5 million square feet. And they can't get into it. They finally get inside. And they go with one of his friends from college as a director, and they open the door and they look inside, and it's dark and dismal, and it's drugs and prostitution and it's crazy stuff inside of that place. And they look around, and it's incredibly dark, and Elon's looking around and he says, well, what we're going to do is we're going to take off the roof here, we're going to make it all white, and we have the production line running there. And so they learn how to build it. And it was making 400,000 or 500,000 cars a year, 600,000 cars. Then they go out and they build a facility in Shanghai. And it cost them $7 billion to build it for 1 million cars. And that factory was making $15,000 in profit a car, investing $7 billion, making $15 billion a year. And then price cut after price cut after price cut. Chinese are incredible competitors. I don't understand how American car companies will survive, except for Tesla. And so I'm going too long.
But,
no.
Ron, let me just ask.
But anyway, the fundamentals are changing. Instead of making $5,000 or $6,000 or $7,000 a car, you go into robo-cars, and every time they have 1 million cars that they make, that they keep, that are $30,000 a piece that last 1 million miles, those cars are going to generate 50,000 revenue miles a year. So before the model was they're making $7,000 in profit a car, $6,000 in profit a car, 1,000,008 cars. Now all of a sudden you're keeping the cars and making them robo-taxis. What that means is that if you do 50,000 miles a year for a car, those cars will generate 50,000 revenue miles, will generate $30,000 or $40,000 or $50,000 in profit per year, per car. So every time you have 1 million cars, you're adding $30 or $40 or $50 billion to $30 or $40 or $50 billion to profits per year for 1 million cars. And so everyone has to deal with certain clientele, and I deal with the critiques of my clientele for how large the positions are, and if they get very large, and right now Tesla represents...
It's about 30% in one of the funds.
Well, I think it's around, in Barron Partners Fund, it's about 12% of the firm assets, and SpaceX is about 9%. So about 20% of our assets. So structure portfolios. So QQQ, Bloomberg says that there's only 2 mutual funds in the United States that have beaten QQQ. It's 2,600 in the last 15 years. Barron Partners Fund is number 1. Philadelphia Growth Fund is number 2, and other 2,600, no one else has come close. So I have shareholders in our mutual funds, and when a position gets real large, like Tesla has become, our cost is $11 or $12 a share, then they say, well, how can you have such a large position? And I made an exception after we bought as many shares as we did for clients between 14 and 16, and no one else wanted to buy stock, that I went to the board of our funds. I said I wouldn't buy any more stock, but I have to buy this stock. I'm not taking any corporate opportunity. All of the other funds I have already invested, but my deal with you, if you let me do it, and I said I wouldn't, but if you let me do it, then what I'll do is just make Barron Capital financially stronger. I'm buying it for them, not for me. And then in addition to that, I'm the last in, I'll be the last out. So I won't sell a single share personally until I sell all the shares for clients. And that's what I've done. So even though we've sold maybe 1/3 of our stock for clients, I have not sold a single share personally.
Ron, do you think the bloom is off the rose at all for the EV transition, or at least for the mandates by whether it's states or the federal government to hasten the transition? And does that matter with Tesla, since there's so many other things?
Once you get to scale, nobody can compete. The Chinese feel that there's only one competitor.
Everyone's going to want electric cars.
Yes, everyone.
Okay.
As we continue, Barron introduces a crucial element of his thinking: the broader economic landscape. He emphasizes that the fluctuations in Tesla's stock price and the market in general are not entirely organic. In his view, government policies, especially those aimed at tackling inflation and recalibrating economic policies, are playing a significant role. These moves, according to Barron, aren't random or accidental. Rather, they are intentional adjustments that are designed to guide the economy toward a more stable future. For Barron, this context helps explain why Tesla's stock has taken such a hit. While others may see it as a sign of trouble, Barron views it through a different lens. Instead of focusing on the immediate effects of inflation and policy changes, he's looking at the long-term trajectory. The reality is that Tesla's innovation, led by Elon Musk, is moving forward at full speed, and the market will eventually catch up with the company's true value. This is where Barron's long-term strategy comes into play. He's not concerned with the ups and downs of the stock price in the short run. What he sees is a company at the forefront of a transformative wave, and in his mind, the next few years will define Tesla's role in the global economy. Whether it's AI, autonomous driving, or the development of sustainable technologies, Tesla is positioned to dominate these spaces. Barron sees the current market dip as an opportunity to double down on Tesla's future, not as a sign to sell. The real game changer, Barron argues, lies in Tesla's business model and Elon Musk's far-reaching vision. For decades, we've been accustomed to the idea of a car as a single, standalone product, one that's sold, owned, and driven by individuals. But Musk's vision is shifting this paradigm completely. Instead of just selling electric vehicles, Tesla is moving toward a model where its cars become part of a larger, revenue-generating infrastructure. Barron touches on Tesla's push into autonomous driving, with the introduction of robo-taxis being a focal point of this shift. Tesla's future is about creating a fleet of self-driving cars that can operate autonomously, generating revenue year-round. Barron sees this as the next step in Tesla's evolution from a car company to a full-service transportation provider. Instead of selling cars outright, Tesla will maintain ownership of its vehicles, turning them into revenue-generating assets. The idea of robo-taxis, where each vehicle becomes a mobile, self-sustaining business, could dramatically increase Tesla's profit potential. For Barron, this is where Tesla's true future lies. These robo-taxis will not only provide transportation services to the public, but will also generate significant income for Tesla.
They can't do it. He's in Mar-a-Lago, can't arrange it, can't leave, can't come in, can't get the machine. The people in SpaceX told me that he doesn't miss any meetings, so he comes to these meetings, same thing with Tesla. I don't understand how he's able to do all this. It's amazing what he does. But I think SpaceX is going to be, I think we're going to make 20 times in SpaceX over the next 15 years. I think we're going to make a quadruple in the next 6 or 7. Can it be too big? Sure. So I'm always watching, but I do think that we're going to get a lot more money to manage, so therefore it's going to get diluted down by the new money coming in. Always thinking about how large the position should be, yes. So I know Joe's not a big believer in electric cars, because he likes his Porsche. But I think all the cars are going to be electric, and I think this hybrid is just a sort of a holding off action so that automobile companies don't have to lose money on the electric cars. But the electric cars, I think, is going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive and they're not effective enough, and they're not going to be part of the mix either. So it's going to be all electric. And so what I think is going to happen is that the reason the stock is down is not because of the quarter. It's not so exciting to be up 1% in a year when everything is, the market is so strong. I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make he's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting. I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what the normal, these 100-year-old companies, cost them $5,000. We can make a motor for $1,000. If you're making the internal combustion engine cars, I'm just talking about how stagnant businesses become and how used they are to operating the way they've always operated, that they don't look for new things to do, new ways to operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that people get entrenched, and they do things without trying to make things better and cheaper and faster all the time. There's no incentive to do that. So Munger says, show me the incentives and I'll show you how people act. Mm-hmm. And that's the idea, that people, the incentive, what's the incentive for someone who's 55, 60, we got to get off of this. But the idea is that's the reason stock's down. And when? Oh, it's going to go up huge. Now is the bottom.
But do you know who else shares in pro-Tesla optimism? That would be today's sponsor, Seeking Alpha. Seeking Alpha is the best pro-Tesla news source on the internet. Click the affiliate link in the description below to get the latest Tesla offering, price targets, innovation, and everything Elon Musk. Link in the description for a very special offer.
And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they're making it, they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So the 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to, but overall, until they expect to do 5 million of these new cars. Well, we have a small investment in Cruise, because I wanted to see what they're doing. And Waymo is, their cars are $250,000, and they're trying to take cost out. And for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every night in California. Last Sunday, I was in Vail, because I want to see what they're doing with AI in the mountain and capital spending. And then that was on Sunday. And then on Monday, I was in SpaceX in LA in the morning with some engineers and some finance people. And the afternoon, I went to Tesla, and I was with the autonomous driving people and also the compute people. And then afterwards, they said to me, Ron, would you like to see how we've made unbelievable advances? The first 11 versions had to be designed so that they had code every single thing that happened.
Right, and now it's all AI.
It was impossible. And so therefore they weren't making progress for 2 or 3 years. They were at a plateau. And now what's happened, they have version 12. They have all this enormous amounts of data, and now they have compute to figure out, humans can't do it. Now they have compute to figure everything out. And so now you're on the verge with autonomous driving in your car. So I said, okay, show me. So we do the few hours, couple, 3 hours, and then before I'm going to go back to New York, I say, okay, so I want to see how it works. So we go into the parking lot, and we get into the car, and I have an analyst with me, and then they had the compute person, and they had an investor person, and so we're sitting in the car, and so where do you want to go? I said, I want to see Steve Jobs' house. And say, okay, so they punch in the address, and we get into the car drives around by itself. Didn't do it, all we did is punch it in. Drive around the parking lot, goes to the road, there's traffic going both ways, it looks both ways, looking for an entry to get in, gets an entry, pulls in, makes a left-hand turn, drives right behind cars in front of us, there's a stop sign, first car stops, goes, second car stops, goes, we pull up to the stop sign, car looks both directions, makes a right-hand turn, just drives. And then all of a sudden there's a pedestrian crossing the street. The car stops to let the pedestrian cross the street. The pedestrian, I don't know if I was being set up on this, but the pedestrian waves, and then the car starts going again. Then it pulls up, then it makes a left-hand turn, and then goes in front of Steve Jobs' house. It's a nice house. It was just a house, though. I was expecting a house, but it was a house. And so stopped in front of Steve Jobs' house. Then he has that house, and he doesn't, his wife does, the house next door. Then they had looks like 3/4 of an acre for sale next door for $15 million. They didn't go back. It drove all by itself. So what's going to happen is that I thought the idea had been that you're going to sell a lot of cars. So as a result of that, once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data. If they're making cars, they make $7,000 in profit a car for a car they're selling for $35,000, minus the $7,500. I want to just make two comments about, number one, how it's the safest car that's ever been built in the world. The safest car ever built in the world. And about a week ago, or 2 weeks ago, or 3 weeks ago, there was a man who took his wife and 2 children, 2 daughters, and drove it off a cliff 250 feet above the ground, and at 71 miles an hour. He was trying to commit suicide and murder at the same time. The car flies off the cliff and tumbles down to the bottom, and the roof on a Tesla is 30 or 40% stronger than any other roof, and the center of gravity is the middle of the car instead of the front of the car. And it rolls down to the bottom of the hill, and everyone's looking down, and then they lower people down, and they open the doors, and people just sitting there. They were fine. Yeah, so unhurt. And so I told Elon he has to text about this and tell people that if they want to commit suicide, they should not be driving a Tesla. They should drive, a Bentley. Drive a Bentley, drive it up the cliff, you'll die. Don't do it in a Tesla. So number one, the safest car ever been built. And of course he tweeted about that. Number two, Toyota. So Michael Barron, my son, and I went to visit Toyota in Japan a couple months ago. And we were meeting with an executive, and we had a translator with us because we don't speak Japanese. That guy did speak English. And so we started asking questions, and initially it starts off, he's responding in answering my questions in English, and then all of a sudden he switches to Japanese. And it happens every time there's a type of question. He starts off with English and then goes to Japanese. And I finally say, listen, I can't have a conversation with you when you have a translator and I'm listening to this translator. I got to talk to you in English. And so it was nothing. And then we walk out, and this whole strategy behind Toyota was they are negative about electric cars. Right. And what he wanted to do is he said, we want to have the lowest cost of mobility in the whole world. And so as a result of that, rich people, they can plug in their cars. If you're a lot of places, there's not electricity, so you can't plug it in. So we're not into that. That was what we took away. So we walk out, and I said, Michael, I don't understand any strategy that they have here. This reminds me sort of of Sony in the 1970s. You know, they're just stuck in their ways. But I don't know. We never heard the strategy. And he said, Dad, I've never been more bullish about Tesla. And what do you know? The head of Toyota just retired yesterday or the day before, last week. He's the grandson of the founder. And he says, I'm too old for doing this. He was 65. I'm 79. So basically he says, I'm too old for doing this. The bottom line is that the head of Volkswagen gets fired. The head of Ford, Mark Field, gets fired because they had bad strategies, bad people. And Mark Field came to visit me a few years ago. You couldn't have believed the negative things he told me about Elon Musk. All wrong. And just, he had a bad strategy, not a great executive. Okay, I shouldn't say that. All right, good guy.